What's happening, everybody? It's your boy, Sean McLaughlin, joined today on the Options Trade of the Week with Steve Straza, filling in for the world-traveling JC Peretz. What's happening, Steve?
Hey, buddy. Thanks for having me.
Hey, man, thanks for pitching in. And you know what? I feel like it's kind of makes sense that you're on the show today because you and I really are the ones who put our heads together for this particular trade this week. And it's a trade that you really like, and we'll get into that in just a second. But this is the options trade of the week, where we kind of talk about the trade that we put on for option subscribers here at All Star Charts. And this week's trade is a play on sector rotation. It's a play in the logistics space, and it's a play on the fact that we are beginning to believe that small caps could be the leadership at least over the next, I don't know what, 3 to 4 months. You think maybe as these large caps kind of start digesting these big runs they've been on.
I think it's fair to say weeks to months at this point.
Yeah. In fact, right before we went live, I was just pointing out to you that, boys, the big caps are having some pretty ugly, bearish, engulfing daily candles today. Google in particular, Amazon looks pretty bad. Microsoft is down. Apple's down. Pretty significant pullbacks. I mean, it's just one day. It's just one candle, but it is notable. And
Definitely stand out. And,
yeah,
and
so
meanwhile, Sean, but hold that thought. At the same time, look at small caps. Look at IWM.
yeah, IWM, man, what a rally we've seen in IWM over the last, let's call it 3, 4 trading days. Unbelievable. Well, not unbelievable, but it's moving faster than I thought it would. It's doing what I thought it would do. It's just doing it faster than I thought it would do. We are positioned in a bullish options trade in IWM that's been working out pretty well for us, but it's working out faster than I thought it would, which I'll never complain about that.
Well, let's revisit that, right? What is the bet that we made there? It was that it's a bull market. When we look around, whether it's growth or tech or international stocks, we're seeing a lot of bullish developments that would suggest that the parts of the market that are not participating, or the current laggards, will eventually catch up. And we looked at IWM and we said, wow, how clean, sitting there right at those former lows, key level. It's acted as support several times since last year already. So we were basically just betting on a rebound and some sort of rotation, and that's exactly what happened. I mean, our timing was pretty nice, but we've been kind of looking for these areas, whether it's financials or industrials or small caps, to kind of pick up the pace and start participating. And we've been saying like it needs to happen soon. Finally got it, and that's what today's trade is, right?
Yeah, and going back over the last few weeks, kind of the operating plan I've had with the new trades I've put on, it started with that IWM trade where we said, okay, small caps are probably set up to start playing some catch up here. And IWM was the first trade that I did that expressed that thesis. And every trade I've done since, I believe, has been stock positions in stocks that have smaller market caps that we believe are going to participate in that type of catch-up trade. So why don't we get into the one we're doing today, GXO Logistics. And by the way, Straza, I will freely admit that I had never heard of this stock until we started talking about it today in our analyst meeting.
It's new. Hasn't been around very long. So this one IPO'd mid 2021. Yeah, about 2 years ago.
Yep, I had never heard of it, and my initial thought was, "Oh, great setup, but the options are probably terrible. There's probably no volume." But the volume was adequate, but more importantly, the bid-ask spreads were relatively tight. So I was like, "All right, I feel pretty comfortable putting on a position here," and we decided to put on a bullish bet. And we used options that expire in January, so we have some time for this to play out. We've got 6, 7 months for this thesis to play out. And what we did is, even though volatility is low in the options, there was still some notable premium to be sold in some out of the money calls, especially in the January expiration series we looked at. So what I decided to do here, Straz, knowing that we had an intermediate price target of around $77, which is highlighted by the Fibonacci line there in your chart, I decided to put on a bull call spread where I bought the January 60 calls and I sold the January 75 calls against it. If you want to flip to the next chart there, show the P&L graph of this trade. Cost me $525 to put the trade on. And as you can see, our risk is limited to the debit that we paid today. We can't lose more than 525. This thing could go to zero tomorrow. The most we lose is 525. Now, on the flip side, our gains are capped, right? If GXO gets above $75, we're not really going to participate much further beyond that because of the short option at the 75 strike. The most we can make in this spread is 1425. And actually, you know what, Straza, my math is wrong on that. This is my bad. That should be 975, not 1475. I need to make a correction on that because the most this spread could be worth is 15 bucks, right? That's the difference between the strikes, the difference between the 60 call that I'm long and the 75 call that I'm short. So the most the spread could be worth is 15 bucks. I paid 525 for it, so you back out 525 out of 15. That leaves me 975. So I'm off by $5 here. I apologize for that. I just noticed this now. 975 is the most we can win. But
Why?
that said, sorry, go ahead.
I was just gonna say, why do it this way? Why not just long calls? Why did you decide to sell the calls as well?
I did it this way because look at those. You can see it in that graph there. Go back to that graph for a second. If you look at those 75 calls in the bottom right and that little red, what do you call that? A pentagon? What is that? Home plate looking thing? You can see the 210. That's what the calls are trading at. That's pretty, juicy premium to sell. I felt like, especially considering that we have an intermediate price target of around $76, $77, right? If this thing starts moving. So I feel like, hey, if we can get most of the way there and get some nice premium for it, that's why. Now, I don't hate, if you wanted to go in and just buy the calls, just buy the 60 strike calls, I don't hate that. But I like this better. That's why I did it that way.
How are you going to manage it?
All right. So good question. So one of the things that we talked about in our analyst meeting this morning is that one of the things we liked about the trade is that it broke out and then it had a successful retest, which is what that green arrow at the far right of the chart there is pointing to. That successful retest, we liked that. Now, if I wanted to be a little bit more forgiving, let's call it, I could use that level as our stop loss. So like around 54.50. Yep. Nothing wrong with using that since these are January options. If you want to give it a little bit more room, you can. I'm being a little tighter, Straza. I feel like today's trading action, which is not captured by your chart here. This chart is 1 day stale, by the way. Today, the stock is breaking out above 60 bucks a share. So for me, the low of the previous 3 days, which was right around 50, we'll call 57.75. If we turn around and break below the low of the previous 3 days, that's my signal that at least in the short term, we're wrong. Maybe I'm being a little too tight on it, but I just feel like this is one of those things it's going to go right away if it works, or we're going to figure out if we're wrong pretty quickly.
You already got the retest, right? Double retest wouldn't be good. You're probably back in the box anyway. And if we break where you're out, it's probably headed in that direction, right?
Yeah, so 57.50 is my stop loss level. And I get questions about this all the time, Straza, when I say 57.50 is my stop loss. And then so they say, people ask me, okay, well, how are you working that stop loss order in your options? I'm like, well, I'm not putting a stop loss order in the options. Right. What I do is I wait for the stock, the underlying in this case, to close below my level. So 57.50 is the level I'm looking for. I'm looking for it to, let's say it closes at $56 today. Well, then tomorrow morning after the open, sometime after the open, not immediately at 9:30 in 1 second, but sometime in the first half hour of the trading day, I will work my exit. I will put out a limit order. I'll try to get out at a fair price. It's never a stressful exit because my risk is defined, right? I mean, that's the key. We size these positions up front at a price and at a cost that in the unfortunate situation where we lose everything, that's fine. It's a totally acceptable loss to our portfolio. It's not going to hurt us, any worse than any other trade. Nope. So when I'm working that exit, I'm taking my time because I'm comfortable in whatever I lose is better than a full loss. So it's all right.
Sean, that would be a great lunch and learn about how you're using the price action in the underlying to manage or close your positions and options.
Well, let me check with my booking agent, but you should definitely get me on the show.
Right? I don't know. I don't think they're doing one this week. As you know, we're the only ones working this week, so maybe next week, buddy.
Yeah, I mean, what are the guys getting an early start on July 4th weekend? I don't understand what's going on, but yeah, it seems you and I are the only ones here.
I'm kidding. Look, here's what I like about this name, right? We've been riding the big cap growth, mega cap tech all year. It's really been working. We are getting an overwhelming amount of evidence since late last week that there's going to be other areas of the market that might probably offer better opportunities. Like I said, weeks to months ahead. This is one of them. It checks both of the boxes. We're looking down the cap scale, smaller mid caps. This is, I think, 4 or 5 billion. And then we're looking into the value groups or more cyclical areas. Industrials. This is a trucker, a logistics company, right? And both of these groups, small caps versus large, logical level to start showing some leadership. And then industrials versus tech, logical level with this relative trend to bottom out and start working higher in favor of industrials. So this one's really, I think, like in the right pond. This is where we want to be fishing. And it's a perfect base, has all the bullish characteristics we're looking for. So
Yeah, and look, we've put a lot of trades on like this recently, and they're all starting to work pretty nicely. So if it ain't broke, don't fix it, right, Strazza? Let's go after it.
keep buying the ones that look like the ones that are working, right?
Exactly. All right. So to recap, we are long GXO Logistics, ticker GXO. We bought January 60, 75 bull call spread. So we're long the 60 calls, short the 75 calls. We paid 525 for it. If I could sell this spread for 1050, which is double what I paid, that's where I will take my profit. We didn't talk about the profit taking, but that's where I'm out. If I could sell it for 1050, I will do so. For any of you who saw the blog post I put out about this trade, I'm going to go issue an update on that right now and fix this chart because I'm embarrassed by my typo here. Not cool. I'll get that fixed straight away. Strazza, thanks for pitching in, taking JC's spot today. You're better looking anyway, so this is great.
This was fun. Thanks for having me. See everybody tomorrow at 8:30 for the morning show.
All right, I'll be there too. Take care, guys.
Yeah.